So Romulad, thank you so much for joining me
Sure.
today at GAIM Ops Cayman. Can you tell me about investor sentiment today? What is it that they're saying they want versus what they're actually allocating to?
Sure. I would say particularly in the private credit space, it's the traditional, especially downside protection is one. Disciplined due diligence in terms of underwriting as well. And diversification. Those are the three things that we've seen historically that they were looking for. I would say in reality, what they're actually looking for is a good track record from the manager and the ability for the manager to be able to execute their strategy. Those are the two things that they're actually investing in.
Okay, amazing. So then, how can the managers really communicate that to the investors? So how can they differentiate in that private credit space?
Yeah, great question. One way is in terms of sourcing their deals, right? You want to make sure that the people that you're lending to, that you're underwriting with, actually you have a process to really get to them and underwrite them effectively. So how you're sourcing your deal. Do you have a proprietary sort of system or relationship building to source those deals? That's one particular way that I think you can do it. Disciplined underwriting, as I mentioned before, to diversify themselves, to make sure that your underwriting correlates with the type of investment and the people that you're investing in is very helpful. Another way to sort of diversify is being very operationally efficient. Because private credit is such a niche space, you have to have the right partners, you have to have the right technology. So those three things will really help diversify and sort of help you stand out from the crowd.
So you mentioned people and technology. Are these barriers to what makes a deal go through?
Yes, definitely. Technology, not having the right technology, because private credit is such a niche area and space, not having the right technology can definitely hold up a deal. You may have an investor that's ready to invest and you don't have the right technology, onboarding, AML, KYC to bring in the actual investment. In terms of people, if you have the wrong sort of infrastructure, if you have the wrong legal firm that doesn't structure the actual private credit entity vehicle the right way, that can hold up a deal as well.
And what about operational hurdles? How do they impact fundraising?
Yeah, so operational hurdles can definitely, again, if you have the wrong, let's take fund administration, for instance. An investor comes in, they have the wrong portal, they don't have the proper infrastructure to take on the investor, they don't have the right investor onboarding, as I mentioned before, that can certainly hold it up. They don't have the right expertise, right? They don't know how to account for investment. Where does it go? How do you structure it? Those things can really, really affect it. Valuation methodology also, if you don't have the right technology around that, that can also hinder sort of your deal.
Yeah, absolutely. Romina, thank you so much for joining me
Sure.
today.
Thank you for having me.